Welcome to another Coffee with Samso, where we have chats with CEOs of companies telling us what their stories are and sharing us the concept of the industry and the sector. Today, I've got Sebastian Chang here from VIP Gloves Ltd, which is a glove manufacturer based in Malaysia, listed on the ASX. The code is VIP. Welcome, Sebastian, to Coffee with Samso. We maybe just give us a brief about yourself, and then we shall just enjoy the story.
Hi, good to be here. My name is Sebastian Chang. I'm the non-executive director of VIP Gloves Ltd, a company listed on ASX, but the operations are run in Malaysia here. We are essentially a nitrile glove manufacturers. A company got listed about 3 years ago in ASX.
Tell us what does VIP do?
Okay, as I said, we are essentially a manufacturer of nitrile gloves. The gloves that we use it for, we categorize it as examination gloves. We use it for, in the hospitals, in clinics, or in, pharmaceutical industry, and in fact, across our lifestyle.
Yeah, I mean gloves in the sense of for the ASX. It's probably a sector that a lot of investors aren't aware of. It's obviously been a very profitable business for the last 10 years. I think maybe if you could just give us an idea of. I mean, traditionally the gloves has been. I think there's a graph I've seen. A 10% year-on-year growth over the last 5 years or so. And then the pandemic or this COVID-19 has hit and everything sort of magnified significantly. Maybe just give us an idea or the journey since then and what the business is all about.
Yeah. Okay. When we started, in fact, the company originally, we are machinery manufacturers. We supply machines for the glove manufacturers. That was the earlier part of the company. But about 3-4 years ago, we decided that it is also good that we venture downstream into glove manufacturing. And since then, we have never turned back, and we are now putting all our efforts and our capacity all into glove manufacturing. In fact, we are also slowly phasing off the manufacturing side of the manufacturing of machineries from there on. So yes, you're right. Gloves has been, the demand for gloves, as part of the PPE has been there, and then it's been growing at, in fact, double-digit growth every year because of the awareness of health and cleanliness, etc. But it's only earlier this year that suddenly the focus was focusing on, the face mask and the gloves, and that's why it suddenly became the limelight. In fact, it has always been there. We have always been enjoying very good demand, very good profit margins, and very good growth.
Yeah, I know. When we first spoke about your sector and things, I think there's someone made a comment to me. It's not rubber gloves; it's nitrile gloves. And over the time, the significance of that word is. I wrote an article about that as well. In terms of maybe the views, most people in Australia would not understand the significance of nitrile as opposed to the traditional type of gloves. Maybe could you just give us a brief from an industry, from inside the industry, how you view that?
Traditionally, a lot of people, when they say rubber gloves, it becomes like just a code name, rubber glove. But in fact, what we are doing now, or what the industry has evolved into, is to produce petrochemical related product in nitrile. It is not natural rubber. It is a petrochemical product, nitrile. And so the gloves is actually less sensitive to skin and is, more commonly used. and it's more flexible in terms of the production, in terms of the usage. So in fact, again, we can see that over the last 10 years, the demand for glove per se, has actually moved, skewed towards the nitrile-based products rather than natural gloves. So in our case, we are actually 100% in nitrile gloves. We don't really produce natural rubber gloves anymore.
In terms of the market, I mean, obviously in the last 2-3 months, the glove sector and Malaysia is the dominant player in this sector. Correct me if I'm wrong. And there's been a great surge of share prices and profits over the last couple of years, especially in the last few months. Can you give us an insight, especially with your, being an analyst in your past life, what that means and how do you see this sector going, say, in the next 12 months or 24 months?
Okay, if I put a hat as what you said, I was an analyst, I was a fund manager before, and also I spent a little bit of time in corporate finance. From that angle, if I look at it, is the investing public are generally having a very robust view on the demand and on the profitability or the revenue growth for the glove manufacturers as a whole. So I think that actually prompted the sudden surge in the demand for the stock. And as you know, Finance 101 will tell you that you have a demand for the stock, share price goes up. And I mean, it's not really speculating anymore, because you can see it from March or February, March, when the pandemic hit worldwide, and that is where the demand actually grew. And companies have already starting to report very, very impressive numbers. We are talking about companies tripling up, quadrupling up their profit. So I think these are all evidence of where the growth potential is. And for that, investors are just willing to pay a higher earnings multiple for it.
The big players like the Hartalegas, the Top Gloves, they're very synonymous with glove industry. Anyone who's been following the industry probably can sort of roll those names of the top four, Hartalega, Top Gloves, Supermax, those kind of people. And obviously we've had this big hype, and we've seen the market come back, and they've corrected, and then now they've sort of gone back again. It's a bit like a trader's mentality of a chart. The run to the hill, and they've come back and have the rest, and the rest allows them to go for another run. Again, going back to your analyst hat, if you put your analyst hat on, is that sustainable, or is that something that the industry can hold? Obviously, there's lots of talks about the vaccine coming in, but and I can see from the analyst reports that it appears that the share price are reorganizing for another sort of potential run. Is that something sustainable in your point of view?
Okay, I rather not stick my neck out and talk about where share prices of glove companies are going. But this is what I can say, that, as I mentioned earlier, the demand for gloves, the revenue growth, you can see it over the last 10 years of all the big or small names of the glove manufacturers have been growing up very strongly. And this pandemic, when it occurred, you really see that everybody now is pushing up to 100%, 105% of their capacity. So more importantly, what we are looking at is that, looking from the point as an analyst and also as a director of my company, what we are looking at is very secured order books, sustained to, in fact, for the next 12 to 18 months. So basically, we are locking in our revenue, so to speak, for the next 18 month point of view. So, when that, scenario happens for a company or for the industry, then, certainly the analysts or the fund managers would like the earnings sustainability of the particular stock. So share price just goes up. And to the other point, you were saying that there was some tabling off of share prices. From March, April, we saw really almost like a V-shaped type of a push. Basically, the share prices just taking a little bit of uh, tabling off, and there was perhaps some profit taking, because put it this way, if you are a fund manager, you already make 2 times or 3 times your return in less than a year. Come on, take some profit. So we saw that consolidation in the share prices in maybe about 2 months ago. And now, I mean, I hate to say this, but now that it looks like the pandemic, the second wave of the virus is coming back in. I mean, Australia, I think you had it a few months ago. Even in Malaysia, we are just starting to see a second wave of it. I mean, it's not that what we like to see, but that actually again resulting in a higher, again, a second wave of strong demand push again for us. So I am not surprised to see that the share prices are now looking into another levels again.
You touched on the demand side and where things are going in terms of I know in to some degree this is sort of a range or a very sensitive word, the average selling price of these. I've seen a lot of reports coming from the bigger firms and a lot of fund managers talking about the rubber industry, and the average selling price seems to be moving up in range upwards. Do you think that's a sustainable thing? Because obviously, people can't keep having such a steep rise in pricing.
Okay, well, ASP, average selling prices, has gone up quite a lot. In fact, if I may, I'm looking at easily more than double or even tripling, our selling prices from before COVID came into the picture. And I think eventually it may taper off, it may come off a little bit, but I think it will not go back to the pre-COVID era anymore. But I think more importantly is not only the selling price. I think what we are seeing is that the margins for the companies have widened, and then it will stay at reasonably good margins here on. Again, I fall back to that demand and supply, where you see the push in retail prices, is where if the lifestyle, general public lifestyle all over the world has begun to realize that gloves is just an essential product that you have to do it becomes a new normal, then you will be able to see sustainable demand growth and demand. Then I am very comfortable that the selling prices will stay high. May not be as high as what we are now. I think eventually it may taper off a little bit, but I'm quite sure and quite confident that it will still stay much higher than the pre-COVID era.
I mean that's fair. I think I agree with you that this stabilization of price will happen, and I guess at the end of the day, it's all about margins. And I'm sure the margins, before, like looking at your recent announcement, especially obviously you guys are coming off into making profits and having a steady progression from just being a recently glove manufacturer. Maybe give us a rundown. Obviously, of course, the results came in. I think the market sort of looked at your sales at 6 million. And then recently you've made it your annual report has come out. Obviously the figures are very, very promising, and it shows, to me, it shows it's in line with what the industry sector would be in 12 to 24 months. I think there's a net profit figure pretty close to 3.4 million. Give us a rundown on what all that means in terms of, for investor looking at something sort of a brick and mortar fundamentally based business. Just give us a rundown if that can.
Okay, in fact, our recently announced audited account for the whole financial year, the figures was just, about, I would say, average, because it incorporated the earlier part of the year. So it is really not fully reflective of what it is today. I think you did mention that the first quarter, which is actually an estimate that has to be put into our annual report, where I think you mentioned something about 3 over million is what we estimate for this quarter. I think that figure would probably be more representative of what we are doing now, on a quarterly basis. But in fact, that quarter is also, to a certain extent, not fully reflective of what we will be doing over the next, say, 9 months, for the remaining part of the financial year. The reasons are two. Number one is we still had, even until as we speak now, some very old orders that we locked in at a lower price. But of course, most of the prices has been revised up to the current prevailing prices. There are still perhaps, a few percent left. Yeah, we should complete it in, another month or two for all the old backlog orders that we have to produce. So on average, we are still have to absorb some of the old prices into our revenue. But when that is fully exhausted off, then you will be looking at a true reflective of the revenue potential for the company. That's number one. And number two, as we speak now, we are also very much into expanding our capacity. We make the announcement earlier on, so it's no secret about it, that we will be gradually adding in capacity. So we should be able to see some impact coming in towards the second half of the financial year. That means year 2021 onwards. We will be slowly getting in some of the new capacities coming in. So I think, to sum up, is that the second half of the financial year will be much stronger than what we would achieve for the first half. So we are all very excited over this thing. And, as I also mentioned earlier on, it is not going to be a short-term spike because of COVID. COVID helped to push our demand up, but I think, it is going to be sustainable. At least, we can see it easily for the next 2 to 3 years.
Yeah, I think I agree fully. I mean, coming from a mining background, I think if you look at the occupational health and standard safety level, we've seen it in our mining sector. The requirements and the expectation of levels of safety increases every year. And if you look back 10 years, 15 years, the demand and the cost of having greater safety has increased significantly. And I don't see any different with the glove sector. In terms of your expansion, I'd like you to elaborate on that, because from an investor point of view, we like to see, well, we think we like to see, and we like to know, how does the company, where it is today and how the progress is going forward. Against that will be reflected in your news flow. So how do you see the company at this present time and your expansion plans going forward, especially when you've mentioned that, the second half would be stronger? How would that happen?
Okay, let's put it into a short-term, medium-term, and long-term target, what we are doing now. In the short term, over the next perhaps 6 to 12 months, we will be adding in extra lines capacity in our existing plant. We still have room. Thank God we have some rooms that we can actually lay out additional operation lines in our factory, and that would come into stream within this financial year. Okay. Then our medium-term plan is we do have another piece of land, a vacant land, just next to our existing plant, which we are also now thinking of putting up additional, completely new factory with storage space, etc. And we can actually put in quite a number of lines, which will eventually doubling of what our capacity. But of course, that costs a little bit of money, and that will take a little bit of time. So we are looking at perhaps 12 to 24 months time, we should be able to put that gradually in place. So that will be the medium term. And with that completions, it will put us into a very sizable positions that actually then we can really compete really effectively. That is where we will be able to actually justify having our own brand name. Currently, we are only producing on OEM market. We don't have our own brand name because our volume is actually not big enough. But by the time that we have this second plant coming on stream, we should be able to have a strong fundamental backings, with a strong marketing team. We can actually roll out our road shows, launch our own branding and do a direct selling to our end customers into all over the world. And at that point in time, we will also perhaps be considering going into the more niche market products. Currently, what we are doing are just the general examination gloves. By the time that we have that capacity, we have that the type of financial strength, we may go into surgical gloves because that is a very high value add market, high margins market. So we need a little bit of expertise to do that, and we should be ready by then. So that is where we will be looking at. So the third phase, the longer term, is where, as I said, we will be going into the surgical and the more niche market products. So I think we have laid out.
Sorry, in terms of capacity, how many gloves are you guys doing per annum, per month, whatever? How do you quote your capacity at this point in time?
Okay, currently we are just running at 4 lines, 2 double formers line, that means the double decker lines, and then 2 single former lines. Currently our capacity is about 60 million pieces, about 50-60 million pieces per month. Okay. So we will be looking at maybe doubling, doubling, by later about next year.
All right, so that's probably what 16 million per month, and doubling that probably when all your expansion happens. Look, Sebastian, if going forward, I mean, at this point in time, I normally try and get you guys to just give, if you had a 5-minute pitch, talking to investors out there who's thinking about, a company like yourself, what's your 5-minute pitch to these guys?
Okay, I think my first point is, well, we are in the right industry at the right time. And number 2, we are a small fish currently in a big pond, but obviously a small fish can swim faster than a big giant fish. I mean, with due respect to the big boys, what I'm trying to say is that the growth is quite easy for us to double or triple our capacity over the next, say, 3 years, rather than a big giant to doubling up the numbers. It's a number game. Okay, so because we are starting from a small base, so we have that capability of doubling up much easier than the guy next door. And thirdly is, as I said earlier, our expertise, our original expertise were actually in the production of the plants for the glove manufacturers, whereby we are able, in fact, we still have our own technical team with us. One of, in fact, our founder directors is actually from that industry. So we can very much be able to design our lines and to ensure that the efficiency is much better than the industry average. So we can actually roll out more efficient product, high quality, and more efficient product, much easier than, you know, say, just, you know, the original Joe who wanted to come into the industry now. You know, because you know, the whole lines are actually running by about 8 to 10,000 pieces of the former running at all times. So you have all the moving parts. It is not easy to really manage that. You know, imagine you're driving a car with 36 wheels, you know, at one go. It is not easy to maneuver that. So you need a certain experience, expertise, and the know-how, the technical know-how. Then you can produce up to your quality product. And the name of the game is you cannot afford to have too high of a reject. No, in fact, our rejects goods as a percentage is actually less than 0.5%, because these are all the margins. Anything, you know, anything more than that, that is where your margins are gone. So, you know, these are all the factors that you know, make up for your plant, your machinery, and your product. So I think this is what we are looking at. This is what we think that we have that niche in doing so.
A barrier of entry for people to come into the industry. I guess it's just efficacy of that reject. You know, like the point. I didn't realize this, but you know, 0.5% reject. You think is a very small number, but I think in the scheme of things, it can sort of you know, affect your margins quite dramatically, which is interesting. Look, Sebastian, at this point, I mean, look for the viewers. I mean, it's a fantastic story. I think that's a good point in the sense that what the industry is like. Feel free definitely to send us some questions. I'm sure Sebastian would be glad to answer them. Sebastian, thank you for giving us time. I think you know, hopefully we can follow the story, and I think from I think you're the only ASX listed company that's in this sector, apart from some major players who are, but then they're not focused on gloves. So I think that in itself it gives credence to a good story. So thank you, Sebastian, and I hope we can follow the story.
Thank you, Noel. Thank you for having me.